Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And guys, we are up $840 this past week from trading one stock in the stock market. So in today's video, we are going to be talking about the strategy, the approach, and mindset and psychology for this trade. So I hope you guys all enjoy it. And if you guys do, hit that like button, subscribe. If you guys want to learn more about trading and how I swing trade, my strategies, how I find stock, check out our school. It's awesome. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. It's honest strategies that you guys can use to start making money. So check it out down below. We have a Black Friday sale going on, so you guys can use code Black Friday for 51% off, which is the largest sale we've done. So make sure you guys check it out down below. And guys, let's jump into this. So this past week here, we've taken one trade, which I know a lot of people that are new to trading might go, how are you ever going to be able to make money from trading stocks if you're only trading one? So the approach I have is trade the best, leave the rest. So yeah, honestly, there will be times with my trading that I only trade one time, and I'm completely fine with that. I have that approach where I will only trade high quality stocks that follow my checklist. That doesn't mean that the stocks that are watch list may not go up or have some sort of breakout or anything like that and have opportunity. Yeah, because they do. But the approach that I have is just keeping it simple, small base hits that compound over the course of a year. So let's jump into this. So right off the get-go here, the broker I am using here is MOOMOO. They're awesome. You know, they have great charting. They have great scanning. More importantly, they offer something called paper trading, which is using simulated money to practice your entries, your exits, your risk management skills. So you can practice and then you can fund an account and start trading. And I'll put a link to them down below because I love them. You guys can get 20 free stock by signing up. So check them out down below. But all right, with this stock here that we're recently holding here and we recently are in on is ticker symbol AEM. Now, the first thing that if you're starting to trade, I want to show you our little handy dandy trading journal here. So let's go to the weekly overview here, and I'll put a link to this down below where if you guys want this pretty much this digital journal, you guys can get it down below. But you guys can see here our profit is about $840. We've been in on this position for actually a little bit longer than a day, about 2 or 3 days here. Our entry price, okay, is near and around $78.50. Our stop loss, $76. Our profit goal is $90, so it's good risk and reward. And as of right now here, we're in on the position, so don't pay attention really to position close or exit price. This is kind of current price, near and around $84.10, which is a return of about $840. Okay, so profit is profit, and I'm very, very happy with that here. So let's talk about the approach here. So the stock here, as you guys can see here, if we go to the daily time frame, it has this good upward trend, which is, you know, trends in my opinion are probably one of the most underutilized things that traders, and especially new traders, don't really want. You know, a lot of people think that a stock selling off like crazy over the course of a year or 2 years brings massive amounts of opportunity, which it does, yes, for like a long-term investment or whatever. But for me, why not trade a stock that has buying pressure, that has an upward trend, and wait for a dip down? And that's kind of what we saw here. So looking at the stock, we had this beautiful, beautiful upward trend. Now, the approach that I had is this. The stock is sold off from about $90 all the way down here to near around $75. And like I said, with my entry being $78, you know, with trading, you'll never be able to buy at the peak bottom and sell at the peak top. It's very difficult to do so. The reason why is because you don't want to enter in on the stock that's selling off and then have it continue to sell off. So you want to make sure there's like some sort of confirmation of buying pressure. And we'll show you kind of what I mean by that. But more importantly here, looking at this, you guys can see that great trend. Also, we had the RSI, which is the relative strength index, trading for about a 28, which last time it was trading for a 28 was back in here. And look what happened to that. The stock sold off, hit that, and had great buying pressure. So, you know, now looking at it, you go, okay, well, yeah, that makes sense, right? And you also want to look at several time frames. You know, and one of the time frames I love here is the hourly, and this is where we kind of took the trade. You guys can see that sell off from about $90 all the way down here to just that $74 range, and then we had this breakout where the stock went and broke out of that trend. So ideally, this would have been the best entry point because you could have entered here, kept your stop loss below $73. So you're risking about $2-3 for a push up to 90. So you're risking $3 to make like $20, which is awesome. You know, that's a really, really good risk and reward there. Now the stock popped up, sold off, and formed this trend line, as you guys can see here. Now for me, I didn't want to enter on this trend. Looking at the stock here, you know, don't imagine this line, right? Imagine that line's not here. And we're seeing this stock sell off, right? I don't want to have it continue to sell off more and more and more. We noticed the stock bounced up, and now it formed this trend. That was that trend line that the stock formed, right? So it popped up above that 90-day moving average line and sold off a little and tapped that line. That's where we got in on this position on that 90-day moving average line. Moving average lines act as support and resistance. So this 90-day moving average line, when the stock is below it, you guys can see where it kind of almost hits it again. We have some sell off, and you guys can see it popped up, nice little breakout here, confirmation, hit it, popped up to this red moving average line, which is the 200-day. You guys can see it hit it, and what happened? It acted as resistance, sold off, and then popped up above it, and now it's been rallying its way up ever since. We also had this here. This is something called a golden cross. So a golden cross is where you have a lower moving average line, like the 90, break up through a higher moving average line like the 200. I'll show you an example of what I mean by that in the past. So you guys can see here, right in here where we had the cross, right? Where this blue one breaks up through that red one, and what happened? Followed by huge buying pressure. So now we already in on a great position. The stock has moved its way up, and we just had another bullish thing for the stock to do. So what's the approach? So now our stop loss for this trade is going to be near and around this $80 mark. If it dips down below that, we'll just take our profit and move on to other opportunity. But if the stock continues to rally up, we'll just continue to move our stop loss up and up and up. That's the approach I have, and we also have to be very, very mindful of the earnings report coming out. Or actually, it's not an earnings report, it's a dividend, excuse me. You know, keeping track of your earnings are very, very important here, and the reason why is because they're incredibly risky to hold through an earnings. You guys can see in the past where the stock released earnings and we had sell-off. So, you know, anytime you hold a stock through an earnings, it just increases that risk tolerance. So you just have to be mindful of it. I thought it was next week, but it's just the dividend. So guys, I hope you guys all enjoyed this. If you did, hit that like button, subscribe. If you guys want to learn more about trading, check out our school, and we will see you guys in the next one. Like, subscribe, sign up with MOOMOO, sign up with our course, and I hope you guys have a great rest of your day and take care.